This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Media shocker. The Washington Post company sells its newspaper and publishing assets to Amazon.com founder Jeff Bezos. The deal caps a day of big news in print, online, and in television.
Looser lending. New reports say banks are lowering loan standards for businesses, consumers, and home buyers. That's good news for prospective borrowers, but does it signal a return to the bad old days of too easy credit?
And homegrown. Wal-Mart pledges to buy more American-made goods. How the Wal-Mart effect could help U.S. manufacturing as we kick off a special series called Made in America. We have all that and much more tonight on Nightly Business Report for Monday, August 5th.
It was a stunning late-day capper today to a day of major news affecting the newspapers you read, the websites you visit, the TV networks you watch, and the cable systems you may subscribe to. Amazon.com founder and CEO Jeff Bezos is personally buying the publishing business of the Washington Post company, which includes the famed newspaper, for $250 million. The Post, long run by members of the Eugene Meyer and Graham families, reached the peak of its fame for tough reporting during the Watergate era. Warren Buffett's Berkshire Hathaway is today a major shareholder. Bezos says, quote, "I understand the critical role the Post plays in Washington, D.C. and our nation, and the Post's values will not change." According to an SEC filing, the rest of the company will change its name within 60 days of the deal's closing, and investors liked the news. They sent shares of Washington Post higher after hours.
Another media legend, Newsweek, once owned by the Washington Post company, was sold again, this time to IBT Media. This is the all-digital news publisher of the International Business Times. The price and terms of the deal were not disclosed. The weekly news magazine that now publishes online only was owned by Barry Diller's IAC Interactive Corp. IBT says it plans to build on the Newsweek brand and to grow the online franchise with readers worldwide.
And deal number 3, the owner of the Boston Red Sox is now also the owner of the Boston Globe. John Henry purchased the paper from the New York Times company for the bargain price of $70 million. The deal includes the Globe's website and Boston.com site. The price tag is just a fraction of the more than $1 billion the New York Times company paid for the newspaper 2 decades ago.
And in the world of television today, Time Warner Cable made a proposal to CBS to end their fee dispute. CEO Glenn Britt sent a letter to CBS CEO Les Moonves offering customers a chance to pay for the network on a standalone basis, otherwise known as the a la carte model. If accepted, CBS would get back on the air after a 3-day blackout. In an interview, the incoming CEO of Time Warner Cable, Robert Marcus, said he wants to make a deal.
We're as anxious as anyone is to restore CBS programming to our lineup and ensure that our customers have access to it. The key really is that we need to do so at a fair price and on reasonable terms for our customers.
No word yet from CBS. Shares of Time Warner Cable ended the day fractionally higher. Shares of CBS down more than 1%.
Joining us now to talk more about this rapidly changing media landscape is Jason Blair. He's media industry analyst with the Telsey Advisory Group. Jason, welcome. Good to have you with us. Why don't we start with the Time Warner CBS spat, and we'll work our way back through some of these other stories. As I understand it, what Time Warner effectively said is, you don't like our offer to pay you for retransmission rights to carry your stations as part of a bundle. How'd you like it if we charge basically on a per customer basis, and then you got to sell yourself to all of our customers system-wide? Do I have that right, and will CBS ever accept it? All right, Mr. Blair, obviously we're having some issues with Mr. Blair's audio. We'll try and bring him back a little bit later. Meantime, let's move on to Wall Street. Investors spent much of the day trying to find a catalyst for stocks, and for a while it looked like economic data showing the nation's services sector might set the tone, but that failed to take hold. With a lack of any conviction, The Dow had its worst day in more than a month in light volume, the Dow falling 46 points to 15,612. The Nasdaq did manage to add 3 points, briefly touching a new 13-year high, but the S&P 500 was off 2.5. Still, though, it stayed a little bit above 1,700.
Weighing on the markets, comments from a top Federal Reserve official saying the central bank is closer to slowing its stimulus program. Richard Fisher, president of the Federal Reserve Bank of Dallas and one of the most vocal critics of quantitative easing, warned investors that the Fed should make its first move to pull back on its massive bond buying program in September. For months now, policymakers have been debating this issue on the pace and timing of any cuts to monetary stimulus.
Well, if you're in the market for a loan, you may be in luck. A new survey from the Federal Reserve says the nation's banks eased restrictions on everything from business to consumer loans in the second quarter, helping meet an increase in demand. Nearly 20% of those questioned report that credit standards had eased at least somewhat for larger and mid-sized firms. As for households, 10% of banks said they loosened credit standards on residential, car, and credit card loans.
Well, when it comes to home loans, another group is also reporting that it's getting easier for home buyers. The Mortgage Bankers Association says there's been an increase in lending to people with lower credit scores. And as Diana Olick reports, it may be because rising mortgage rates are making it more difficult for lenders to find business.
You would think that as buyers return to the housing market, mortgage bankers would be busier than ever, but that is not the case. Mortgage applications are now down 47% from a year ago, driven by a 59% drop in refinances, a direct result of the sharp jump in mortgage rates. Bankers who had been struggling to keep up with demand are now suddenly seeking it, and to get it, they are easing up on the underwriting. Credit availability rose 2.2% in July month to month and is up 3% from May, according to a new survey from the Mortgage Bankers Association. The increase was primarily driven by more cash-out refinancings and more loans for borrowers with larger loan balances or lower credit scores. A Federal Reserve survey of senior loan officers reported the same.
Lenders had a huge backlog of high-quality refinance loans that they finally worked through. During that time, they may not have focused on other loans that might have been more intensive in terms of underwriting.
Craig Strent, a non-bank lender in Maryland, says quality control is still tight, but lenders had put extra constraints on lending just to be able to keep up with the refi boom. Now they're taking those extras away.
As rates have risen and that refinance volume has dropped, they're now turning their attention to other borrowers.
Refinances are now just 63% of all mortgage applications. They had hit a high of 84% in December of last year when mortgage rates hit new record lows. One of the biggest changes noted in the Mortgage Bankers report is that cash-out refis are coming back. This, of course, because as home prices rise, home equity returns. But what's so interesting is that despite getting burned before, so many borrowers are still willing to pull cash out of their homes the minute it comes back in. For Nightly Business Report, I'm Diana Olick in Washington.
To read more on this story, log on to our website, nbr.com.
An outspoken regulator wants banks to get out of the commodities business. Bart Chilton, a member of the Commodity Futures Trading Commission, is calling on the Federal Reserve to reverse its policy of allowing banks to own metal warehouses, an issue we've been reporting on at NBR, as a growing number of buyers complain of prices being artificially raised for metals. Chilton says banks have a conflict of interest when they control the supply of the same commodities they trade.
Meanwhile, Goldman Sachs and the London Metal Exchange are being sued over their commodities warehousing business. The class action lawsuit alleges anti-competitive and monopolistic behavior in connection with aluminum prices. Many buyers have complained about rising metal prices because of long waiting times at warehouses. Last week, Goldman Sachs says it was taking steps to make aluminum more immediately available to customers.
U.S. federal energy regulators are ramping up efforts to go after alleged market manipulators. Today, the Federal Energy Regulatory Commission threatened to fine BP $28 million, accusing its traders of manipulating the natural gas market for several months back in 2008. BP says the allegations are without merit, and it plans to vigorously defend itself.
Chevron will pay $2 million in fines for last year's massive refinery fire in Richmond, California. The oil company also pleaded no contest to charges of violating the state's health and labor codes. Investigators blamed the fire on a corroded pipe that burst. The fire sent thousands of people to the hospital, most complaining of respiratory problems. Separately, hundreds of protesters were arrested this weekend in a demonstration to mark tomorrow's one-year anniversary of that fire. Microsoft is making another price cut, this time for its tablet Surface Pro. The company is offering a $100 discount, and the move comes just weeks after slashing the price of its less powerful Surface RT by 30%. Last quarter, Microsoft took a $900 million write-off on unsold Surface inventory.
Apple's share of the tablet market fell sharply in the second quarter. According to IDC, Apple's iPad accounted for about 1/3 of the tablet market. That's down from 60% a year ago, but it's still the top single seller in its group. Meantime, Samsung's tablet sales quadrupled over the same time frame.
Speaking of Apple, Apple got an assist from Washington today. President Obama overturned an order from the U.S. International Trade Commission banning imports of older iPhones and iPads, which the agency said violated Samsung patents. The ban would have begun today. The U.S. Trade Representative said the veto was based on considerations that could have, quote, an effect on competitive conditions in the U.S. economy and their effect on the U.S. consumer. The last time a president overturned a trade ban? Ronald Reagan, back in 1987, a case involving Samsung.
And still ahead, JetBlue's days as a coach-only carrier are numbered. The airline is changing course, going after the first-class flyer. But will it pay off? First, so let's take a look at how the international markets closed today. To the airlines now, where European authorities have signed off on U.S. Airways' proposed merger with American Airlines' parent company, AMR. But as expected, the approval comes on the condition that American Eagle give up one slot at London's Heathrow Airport. The combination would create the world's biggest airline and must be approved by a federal judge before AMR can emerge from bankruptcy.
And more people are taking to the skies on U.S. Airways. Passenger traffic on the airline rose more than 6% in July, and it comes as the carrier continues to increase its capacity. U.S. Airways, which operates U.S. Airways Shuttle, has been optimistic about the strength of travel demand.
And JetBlue is changing its strategy, making a play now for the first class or business class flyer. The all-coach airline plans to offer private suites and lie flat seats on some cross-country flights. This marks the first time that JetBlue will have two classes of service, but will it take off with travelers? Jane Wells has the story.
The travel industry hasn't had a whole lot to celebrate the last few years, but to fight flat sales, airlines are introducing more flat seats, where the money is, in business class.
Business travel continues to trend up.
At the largest gathering ever of the Global Business Travel Association, airlines like Delta and JetBlue unveiled new business class seats. In fact, it's the first business class ever for JetBlue, as this is one part of the airplane where sales are growing and profits are sky high.
And that's prime money for the airlines.
Business travel in the U.S. is expected to grow 4.5% this year to $273 billion. But the number two market, China, is expected to grow much faster and, in fact, double spending by 2017, overtaking the U.S. as the number one market.
You've got major competition here in the United States coming from the big carriers, meaning United, American, and Delta, all making big investments trying to get more seats, more routes into China.
And today's business traveler wants mobile travel help on the go.
If you're in trouble and you're getting off an airplane, flight's been canceled, meeting's been delayed, you can click to call an agent right away. They'll be pre-briefed with everything about your trip and everything that's going on around you.
We're also finding that companies are looking to be cost-effective with their travel spend.
At the same time, the current global threat alert is allowing many of these travel management companies to highlight new tools they have for tracking and helping employees on the road.
Every CEO wants to know the following, right? Where are my people? How do I communicate with them? How do I track their progress to safety? And how do I ensure that they're safe and sound?
As travel rebounds from the Great Recession, it does so in an ever-dangerous world.
In a global economy, you know that you do have a higher risk profile than maybe in years past. But it's a fact of life, and we all deal with it.
For Nightly Business Report, Jane Wells, San Diego.
We begin our market focus tonight with a big earnings beat. Tyson Foods. Quarterly profits soared on strong demand for chicken and a rebound in its beef business. The meat producer was able to offset high feed costs with price increases. Tyson's, one of the world's largest chicken producers, also boosted its outlook, saying sales for the next fiscal year would be higher than estimates. The stock hitting multi-year highs, closing up more than 4% to $29.69. A different story for E.W. Scripps. Earnings at the newspaper and television company plunged 41%. The company blamed the drop in revenue on a decline of political ads. At the close, the stock tumbled almost 11% to $14.87.
Concern over a slowdown in the smartphone market leading to a downgrade of Qualcomm. A Wall Street analyst cut his rating on that stock to neutral from overweight, citing worries that demand was falling for components used in high-end smartphones. Qualcomm chips power Apple devices as well as many of Samsung's. The stock finished the day fractionally lower, $66.25. Another downgrade today, this one for the fashion accessories retailer Fossil. Barclays cut its rating on the stock to underweight ahead of Fossil's earnings report tomorrow. The firm says its channel checks indicate sales have slowed, despite management's view that sales will accelerate in the second half of the year. The stock fell 6% today to 107.42. We fixed our technical problems. Let's get back to Jason Blair, media analyst with Telsey Advisory Group. I was asking you, Jason, whether you thought CBS would ever accept the proposed deal from Time Warner Cable to go on an a la carte pricing plan as opposed to being part of a bundle. Do you think they will, and do you think a la carte pricing is something that's just over the horizon?
Tyler, that's a great question. I actually think Time Warner Cable's offer is designed to educate their end consumer and their subscribers. It's a serious offer, but it's an offer that CBS can't accept. And the reason for that is if, as a homeowner, I'm offered to pay $4 or $5 a month for CBS, I'll just opt to go buy a $12 antenna, and it's a one-time cost to me. The challenge is that in the early 1990s, Congress passed the Cable Act, and that was at a time when it was worried that the broadcasters like ABC, CBS, and NBC would effectively fail because the cable bundle was getting so powerful. They were at that time either given must carry or they could negotiate for retrans. Well, today the power between content owners and distributors is so imbalanced because of these types of laws that the cost of content is growing so rapidly that a number of households today can't afford to buy pay TV, and that's bad for the entire TV ecosystem.
Jason, it just seems like what's going on in the cable industry, the television industry, and all the stories that we just reported about what's happening in the newspaper industry, that we're at an inflection point in media, and there are going to be new combinations, mergers and sales and whatever. Who do you see in this media space are the winners and who are the losers, whether it's in TV or print or online?
Well, one of the things that we look at is the growth of average residential broadband speeds. If you go back to 1983, the average speed of download that we've gotten at our homes has risen at a compound annual growth rate of 65%. That's a 65% increase every year. So today the average broadband speed is around 20 megabits download speed. We should expect it to be 300 or 400 megs in 5 years. And what happens is that what has historically protected media companies, so newspapers were protected because competitors could not distribute that product, and all of that content has gone online, and what has historically protected them has been eroded. So what we think is that the winners are likely to be those that have programming scale. And in the case of an Amazon, so as you mentioned, Jeff Bezos is now buying the Washington Post company. He's an incredibly powerful competitor, especially because he gives television content away to his Prime subscribers for free.
Well, we have to leave it there. Jason, thank you very much. And any guy who brings his own rabbit ears, we like. We appreciate it. Jason Blair of Telsey Advisory.
Thanks, Tyler.
And coming up on the program, is Made in America a profitable and smart business strategy? Wal-Mart, the world's largest retailer, is proving it can be as we kick off our special series, Made in America. But first, let's get a check on how commodities, treasuries, and currencies performed today. Walmart wants to bring back Made in America. To do so, it's promised to buy more U.S.-made products, a lot more. That decision by the world's largest retailer could make a big difference for the economy and jobs, especially manufacturing jobs. Tonight, in the first of our special series, Made in America, Mary Thompson looks at the Walmart economy.
Here in Fayetteville, Arkansas, new orders are pouring in at Hannah's Candles. The factory has added 60 full-time jobs this year to produce an additional 10 million candles destined for the shelves at Walmart.
The state of our business before our partnership with Walmart was very slow, dismal at best.
Last year, Walmart accounted for $4 million in sales at Hannah's Candles. Now Walmart says it plans to buy $30 million this year alone. By 2017, the retailing giant projects that number will hit $45 million. But Hannah's Candles is just one of the manufacturers getting a boost from Walmart, which is pledged to buy $50 billion in American-made products over the next 10 years. Walmart is partnering with highly automated companies that use raw materials found right here in the U.S. But the economics don't stop at the end of the factory line.
This is not a put an American flag or a label on a product and let it sit on a shelf. This has to be proven with customer demand and movement.
So how many more jobs might be created if Walmart buys $50 billion more of American-made goods like these candles? Boston Consulting Group estimates 100,000 jobs. More jobs at a time when overseas wage increases and higher shipping costs are making domestic manufacturing more attractive than ever. Walmart isn't planning on going it alone and bringing more American-made goods to store shelves. Factories like Hannah's Candles generally have to update their facilities to accommodate more orders, so the push to buy American would be more viable long-term if additional retailers were to get on board. CEO Bert Hanna says he's already getting calls from other outlets.
I think it's our responsibility as manufacturers to try to keep the jobs here in America and figure out a way to do it.
For Nightly Business Report, I'm Mary Thompson.
He is a three-time American League Most Valuable Player. His $275 million contract, the biggest in the history of baseball. And he is also the most polarizing figure in the sport. Alex Rodriguez was suspended today by Major League Baseball for 211 regular season games through the 2014 season, part of baseball's most sweeping drug scandal punishment yet. A total of 12 other players also suspended, 50 games each. A-Rod's suspension comes amid allegations involving the use of performance-enhancing drugs and obstructing MLB's investigation. The media have been taking shots at A-Rod for weeks, and New York newspapers and fans are among those voicing their opinions.
This sport is about fairness. It's about sportsmanship. It's about tradition. You do drugs, you're out.
If I screw up in my job, I get fired. No one comes back to me. I got to fight for unemployment after that. What are these guys, special?
Yeah, I think what he did is actually cheating and probably should be banned.
He should definitely be suspended. Not banned, though. He brings a lot to the table.
He should be suspended. Not for life, but maybe a year.
And that's what he got. Rodriguez will appeal the suspension, allowing him to play for now, maybe even tonight. If the suspension sticks, he could lose more than $30 million in salary.
Those reactions from people on the street and conversations in every office everywhere today.
People have had it.
And it's a very impassioned, visceral response. And we'll see what happens in Chicago tonight.
Yes, we will.
That's Nightly Business Report for tonight. And this is the time of year that your public television station seeks your support. Support that makes programs like Nightly Business Report possible.
Thanks so much for watching. And on behalf of your public TV station, thank you for your support. Good night, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a nightly business report news brief. Major deals involving iconic media names. Amazon.com founder and CEO Jeff Bezos is personally buying the publishing business of the Washington Post company, which includes the famed newspaper, for $250 million. Newsweek was sold again, this time to IBT Media, the all-digital news publisher of the International Business Times. And Boston Red Sox owner John Henry now owns the Boston Globe. The amount? A mere $70 million. Elsewhere, Chevron will pay $2 million in fines for last year's massive refinery fire in Richmond, California. On Wall Street, the Dow has its worst day in over a month, falling 46 points to 15,612. The Nasdaq added 3, but the S&P dropped 2.5 points. Be sure to tune into Nightly Business Report right here on your public television station.